What's going on, guys? My name is D. Anthony with evolutiontraders.com. What we are going to be doing is taking a look at the Nasdaq 100, which is going to be your big tech and mega cap stocks. So starting off looking at the triple Qs ETF today, not a bad day at all, up 1.5%, 4 points on today's session. Now we did close at $285.95, so let's call it 286 for the sake of the video. What I'm looking at here, very, very healthy, right? So we have to assume and imagine a lot of big players, a lot of Wall Street is not going to be around towards the middle end of this week. Obviously, we know that Thursday we are off, and then Friday is going to be a short, condensed session closing early. So, expect lower volume, expect a little bit more choppier moves. I think that your bigger moves and your abilities to be able to take a trade and have some steam behind that trade is going to come within the first 1 to 2 hours of the market, and I really wouldn't look for anything else after that. If you can't really find anything, there's no sense to kind of force a trade on a short week, but the overall charts on the daily is looking very, very nicely. So if we can kind of go back just a couple of months, few months here in time, coming off of this big decline here, put in these lows at 254.26. We had a little bit of a dead cat bounce here, rejection at this 50 EMA, which was a rejection at the 20 EMA also here in October, and then towards the end of October heading into November, followed by another decline. But one thing that I do kind of want to point out here on this decline here that we were looking at from around October the 26th until we bottomed out here on this wick on November the 4th, we did not put in a new low below 254. Okay, so we kind of have to stay with the trend. You always want to be trading with the trend. Now, if you're a day trader, a scalper, there's going to be opportunities to go long as well as short. But one thing that I do want to kind of keep you guys in mind, the overall trend is not setting in a new low. Even when we do have these days like 1, 2, 3 days here where it's a significant amount of pain, yes, you need to identify this and adapt and be able to take your short positions for the intraday, but also understand that once we start to get to the bottom of this range, that if we do not lose the low, we potentially have time to and a chance and opportunity to go ahead and bounce, which is exactly what we did here, starting on this big massive gap up over the 10 and 20 day moving average, as well as the 5 here on the 10th of November. We had a 1, 2, 3, 4 day run up until we got rejected at the 100 simple day moving average. Now, if we kind of go, over to the left here, let's look at this rejection here. Let's look at this rejection here. And if we kind of see where we pulled back to, we pulled right back into this 50 EMA and this rising 10-day moving average, just shy of the 20 here. But this is very, very healthy. Okay, so this is exactly what you want to see in a healthy market. Now, obviously, we know that the market is a long ways away from overall being very, very healthy. But as far as a short-term perspective, this is a healthy pullback. Previous resistance here turning into new support. Now that would become invalidated if we do lose this 50-day moving average on the daily time frame. As of right now, that price is sitting at around 276.69. I do like the pullback here, and I like this engulfing candle here over yesterday's price action. And this is the first day closing back over the 5-day moving average since we lost it just about 4 sessions ago. So all I'm looking for tomorrow on the triple Qs and the tech stocks is a confirmation over today's highs. Very, very simple. I'm going to play that into this channel level here. Top channel level is around 288. We're sitting at around 286. There's an easy $2 move here if we can get a full head of steam. Now we do have FOMC. We've got some numbers coming out before the open, so definitely keep your eye on that. If we get a big gap up, right, and you're holding long positions, you're swinging long positions overnight, and we get that big gap up, sell into that gap up and then kind of let the market digest and see if we're going to push higher. The last thing you want to do is not sell into the gap up, hold it 3 hours later. Now that position is down and in the red. If we open up flat or we open up red and you're holding overnight, give it about an hour's worth of time to see if we can trap those shorts down here towards that 20 SMA and then kind of go red to green on the day. And then your new position, if you have not started a long position, would be over today's highs of around 286.15. So 2 ways we're going to look to play this. Anybody who's holding long or selling into a gap up, kind of reassessing the situation. If we open up below today's highs, then we're just going to let it consolidate. And then as soon as we take out those highs, we're going to go ahead and get long. Obviously, there's no real short position. I mean, there's going to be a little bit of a mini scalp below this 4-day channel level here, which is the 50 EMA. and as well as the 20 SMA. So below 279.51, you're going to have a short position, maybe about a point to 2 points down to this 50 EMA here, or 50 SMA at around 276.69. A little bit of a scalp position here, and then your big macro flush, everything changes if we do close below the 50 SMA. So if we close below this 50 SMA, then my bias goes completely short. As of right now, I'm looking for the pop and looking for the bounce. If I can quickly bring up the 1 hour chart, this is a beautiful flag setting up here over today's highs. 286.13 area's got a lot of room to stretch into 287.34, which is the upper Bollinger Band, and also takes us to Friday's highs, right? So if we kind of look at what we did Friday as well as Thursday in the pre-market here, we got a little bit of a double top here, followed by a little bit of a back test to the linear regression, followed up by that bounce that gave us that double top, back test, tried to hold it once more, lost it here in that pre-market session, and now we've reclaimed. So if you kind of look above, we've got a lot of space into 292 if the market does want to get going for a dead cat bounce into next week. So just again, be careful if you're going to be playing options contracts tomorrow, or especially on that very, very short and minimized day on Friday. Hope this video helps. If you guys like this type of content, make sure to like, comment, and subscribe. Also, make sure to join the Discord. That link is down in the description box below, and I will catch you guys all on the next trading session.